Hey everybody, what's going on? It is James here, and I wanted to sit down and shoot a tutorial video for those of you that are serious about trading. I think you'll get a lot out of this video. I also want to mention that I've made a decision going forward that I'm going to be scaling way back on any type of free content that I do. From now on, I'm going to be focusing my efforts, obviously, on my own trading, which I have been, but also on the people who support me and the work I do. So if you are not yet a student or a subscriber of Patreon, make sure you check the description. There will be links down there where you can join either one of my trading classes or my Patreon itself. Patreon is just $17 a month, which of course breaks down a little over 50 cents a day, which is less than a soda pop at the gas station. First thing I want to talk about, and the thing I'm going to focus on in this video, is systems, and finding the right system for you, and how to use, reward to risk to your advantage, and some of the differences. So I just logged into one of my accounts where I'm doing a little bit of options trading on crypto. It's still fairly new. Options themselves are still fairly new to this site, so there's not a ton of liquidity. It's over on Bybit, but I happened to notice that I got one of my puts filled for Friday. It actually filled yesterday. I just didn't notice. I put in this ridiculous bid for $25. And so I'm going to use this as an example of how people go about wrecking themselves. And I'm not making fun of anybody. I'm not trying to throw the person who sold me this put under the bus or anything like that. It's a very small put anyway. But I want you to think about what this actually means. What this means for me is I paid $25 per Bitcoin in order to own this put, which says that somebody is going to give me $30,000 for each Bitcoin on or before May 6th if it falls below that price. That means that I'm risking $25 per to make up to $30,000 if it fell to zero. Super unlikely, but it is possible. Anything is possible. But if you think about it from their point of view, it means that they just risked $30,000 to make 25. Now, chances are this will not be under $30,000 by May the 6th. I think it's unlikely, even though the market's very bearish. Right now, we're about to put in a fifth, I believe it's 5 red weekly candles in a row. Even in a bear market, you normally get, some kind of relief. You don't just move in straight lines. So I think they'll probably get to keep this $25 that they made per Bitcoin. But that's not the point. The point is, when you do a trade like this, you open yourself up to the type of risk where one bad trade completely wrecks you. Let's say that they sell this put, hypothetically 100 times. So they make $2,500. Well, that's really good money. Except what happens the one time that it doesn't just fall to 30,000, it falls to 20,000. Well, now they've lost 10 grand because 1 out of 100 trades went against them. They made 2,500 and lost 10,000. And when you're trading with that a reward to risk type of system that's that skewed, it's almost impossible to avoid going broke. Okay, so again, make sure when you're trading you're following a proper reward to risk scenario. Now, that being said, earlier on Facebook I posted a post, and it was a bit of a trick question. And the question was, is it better to have a 30% win rate with a 3-to-1 reward to risk ratio, or is it better to have a 90% win rate with a 0.25-to-1 reward to risk ratio? And so we're going to talk in this video about which is better. And the reason I say it's a bit of a trick question is because 99% of people are probably going to go instantly to the math. The math being, if I win 90% of my trades with a 0.25-to-1, I'm going to make about 12.5 R for every 100 trades I take. If I have a 30% win rate, but I have a 3-to-1, I'm going to make 20 R. So obviously the 30% system is better. But it's not. It all depends on the person. If we were robots and we didn't have emotions, then yes, the 30% system would be better. Obviously, it has a better return. But human beings are not robots. And A lot of times you have to figure in the emotional side of trading. If you're only winning 30% of your trades, it means you're losing 70% of the time. So the question becomes, can you lose 70% of the time and still stick to the system? Because what happens with most people is this looks really good on paper, but after they win 5 or 6 or 7 trades in a row, and that 8th trade starts to go their way, they close it early just to make a little bit of money and finally get a win under their belt, and they don't actually make 3 to 1. Or what happens when you hit a bad run and you're hitting a 30% win rate, maybe you're taking 100 trades a month, but maybe you lose 30 trades in a row to start that month. Maybe you hit a really bad streak, and then if you're risking 1% of your portfolio per trade, maybe after the first 30 trades, you're down 30%. Are you going to have what it takes to stick to the system that you know works? Or will you say, you know what, I think the system has stopped working, I'm going to abandon it? Most people will not have the courage to stick to their system. Even if the system has been proven in the past to be a reliable system, they will abandon it and start looking for something else. The grass is greener on the other side. If you take a look at a 90% win rate, this trader is going to have probably a little bit higher happiness level or a little less stress because they're winning almost every single trade. Okay, so for some people, that's going to work really well because they're going to be happy-go-lucky and I'm winning almost all the time. So when they do take a loss, no big deal. They shake it off and they just keep trading their system and life is good. Other people will trade a 90% system with a 0.25 to 1. And even though they don't lose very often, they will get super discouraged by the fact that when they do lose, they're losing 4 times as much as they make when they win. They might have just won 4 trades and they're super happy-go-lucky, and then they lose a trade and they're super depressed because now they're back to break even. Or maybe they won 3 trades but they lost 1 and now they're actually in the hole. See, we're all human beings and none of us work exactly the same way. And so when you think about trading, you have to really take that into account. And it's ironic to me because I've been trading at this point. Next week is my 5th anniversary since I started trading. And obviously I didn't start trading for a living until 2018, but I started trading May 8th of 2017. And in that 5 years, I have never seen anyone talk about the fact that we're all different emotionally and different systems are going to work better for different people. I have seen people talk about the psychological side of trading. I have seen people talk about 2 to 1, reward to risk ratios. I've seen people talk about a lot of things, but never specifically the fact that not every system will work for every person. A 90% system for some people is going to work amazingly well. For other people, they'll lose a lot of money with this system because they won't be able to handle the larger losses. For some people, the 30% system is going to work really well, but other people won't be able to handle the fact that they're losing 70% of their trades and they'll end up losing a lot of money. And so what you have to do as a trader is you have to really get to know yourself. Where are you on that emotional spectrum? Are you the type of person who can be super disciplined and keep a 3 to 1 reward to risk ratio and hold the line, so to speak, trade your system, and don't let a string of losses bother you? Or are you a person who needs to win most of the time? If you're, are you a person who can handle the fact that when you lose, you're going to lose more than you win, but you're going to win almost all the time, right? Which one is better for you? And maybe neither one. Maybe you're somewhere in the middle. Maybe you're somebody who needs to win 50% of the time. You're happy when you're, basically 1 and 1. And maybe you're only going to go for a 2 to 1 reward to risk ratio, which of course would be a massive return if you actually won half the time and won 2 to 1. Or maybe you say, you know what, I think I can win half the time going for a 1.25 to 1, in which case you're still going to be a very, very successful trader if you hit those numbers, right? 12.5 R every 100 trades. Or maybe you say, you know what, I don't even need that much. I just need a tiny little edge, just a little more than break even, 1.05 to 1, boom, there you go, right? Maybe you say, I think I can win 40% of the time, but I think I don't think I can do 3 to 1. I'm not quite that good with my entries. I'm going to stick with a 2 to 1. Great. You can still be a successful trader running those numbers. But you have to know yourself. You have to know how you're going to react emotionally. You have to know whether or not you're going to hold that line. Okay. Set yourself up with a system that fits your personality, and don't try to trade the exact same system that everybody else trades. In video after video, I've watched as I was, I don't really watch any videos from other traders anymore. I haven't in a few years, but I still do read books on trading, from people that have been in the space for decades and decades and things like that. And everybody's the same. Everybody's always the same. They assume that everybody should set their stop loss at the same level. Your profit target should go at the same level. It's not true. It's simply not true. Some of that has to be based on the individual trader. Some of that has to be based on how are you going to react. Find the system that works best for you is what I'm trying to say. And make sure that when you are taking trades, do the math. Like this person that sold me that put, I don't know what they're doing. And I'm not trying to pick on them, but I don't know what they're doing. Let's say that they had a 99% win rate. Okay? What's the risk reward ratio between 25, which is what they're going to make if Bitcoin doesn't fall? That's what they'll make, $25 per Bitcoin. But they're risking $30,000. If Bitcoin hypothetically went to zero, they're risking $30,000. Look at the risk reward on that. Even if they won 99% of the time, they would be losing a ton of money, right? Well, I guess not a ton of money because they would just lose 1R. That doesn't sound right to me. Let's see, average win 83 cents, average loss 1,000. Oh, yeah. Well, I guess if they were only risking $1,000, that's how it would be. Okay. Again, you can't make that work, right? You can't make that type of reward to risk work. I mean, maybe you can. I shouldn't say can't. Nothing's impossible. Highly unlikely that you're going to be a very, very successful trader trading with that bad of a reward to risk ratio. Okay. I know there were so many other things that I wanted to talk about when it came to the math behind trading in this video, but number one, I'm drawing a blank right now. And number two, I just looked at the time and realized the video is already over 10 minutes. I want to try to keep this fairly short, and it makes it easier to edit. It also makes it easier for you to watch. No one wants to watch 30-minute videos. I know I certainly don't. So I am going to go ahead and wrap up there. I do want to remind you that I'm going to be massively scaling back the amount of free content, both on my YouTube channel, also on my free social media channels. I am going to be focusing heavily on the people who support me and the work that I do. So if you're not yet supporting me and you enjoy the stuff I do and you enjoy the content I put out, and if you're benefiting from it, again, you can find links to join one of my classes down in the description of this video, or you can join the Patreon for just $17 a month. The Patreon does come with benefits. It's not just throwing money at me. It comes with more frequent updates, also comes with more frequent trade tutorials and trade lessons. And once in a while, I even share some trades in there that I've taken so that you can learn from what I'm doing. So hopefully everybody enjoyed this video. Hopefully you got something out of it. And obviously, please remember that I am just some guy. I am sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense. If you liked the video, give it a thumbs up, subscribe to the channel, and as always, please remember to trade safe.